Hi, everyone, and thank you for joining today's live stream. My name is Tammy DaCosta, and I'm representing CoinW. Now, today we have had, this week, we've had quite a wild week with crypto markets, and that is what we're going to be exploring today. So firstly, I'm going to go through a presentation. I'm not too sure why it came out like this. Let me just try switch off. Okay. Anyway, we're just going to proceed. So this week, what we've had, let's just start. We did have some positive data or some positive news with regards to institutions. And we had a few of them was GameStop, their Bitcoin investment. And basically they said that they want to put in 1.3 billion into basically buying crypto into the crypto reserve. Then we also have BlackRock that actually launched their iShares for Bitcoin ETP in Europe. And that we saw actually drove sentiment quite a bit because this adds the prospect of now Bitcoin also becoming quite a big asset. Or, for example, we've had Trump announced that there is going to be a crypto strategic reserve, and this adds the possibility that Europe might follow suit. Then we also had Galaxy Digital's settlement. So if you can recall, there was quite a lot of following the collapse of FTX, and that was around 2021, what we had was there were a few knock-on effects, and one of them was Galaxy Digital that also collapsed. So we have had that settlement, which was 200 million. So that was also a positive. Strategy, which was previously MicroStrategy, they also added to their investments. And after we saw BlackRock announce their launch in Europe, we also saw them acquiring more Bitcoin, and that also drove sentiment, but not as much as what we would have liked to see. Then lastly, what we also had was we had the SEC actually announce, we had the official announcement that XRP, or that the lawsuits against Ripple is eventually over. But now, why are markets reacting the way they are? So let's just look at the price action, and this is for Ethereum and for Bitcoin. And we're just looking at a general overview. So we had, so basically Ethereum prices, these are just limited numbers or estimates. And we see that a lot of these, for example, Bitcoin on Monday was still stable. It was relatively flat around 87,499, and there was still cautious market sentiment. And this comes in or ties in with the whole tariff threat from Donald Trump. And those are due to come into effect on the 2nd of April, which is actually on Wednesday. So this is a lot of sentiment, and a lot of data is actually, even though we do have some uptick in some sentiment with regards to crypto developments, a lot of that has already been baked in. And so now what we see is one big thing on Friday, basically today was, and actually this was, there was speculation around this earlier this week, but there was an announcement of 25% auto import tariffs. So that is huge, because if we look at countries such as even Japan, we look at Canada, we look at Europe, and there's a lot of imports that come in from Europe to the United States. Now, the whole thing around Trump tariffs is he is saying that, or he is actually looking to target countries that have trade surplus, which means that they actually export more to the US than they import. And he's saying that's not fair. So he's targeting a lot of those countries. And what's also driving sentiment now is that we're seeing that retaliation from other countries that are saying, no, this actually isn't going to work. We can't have, because there's been announcements of tariffs on aluminium, on copper, that are also supposedly coming into effect. And then there's 20% levies on all Chinese imports. And that was on top of the levies or the taxes that we actually had rolling in from the previous administration. So there's a lot, as I said, there's a lot of uncertainty, and especially with Canada and Mexico as well, they rely heavily on the United States. And those tariffs on the aluminium and some of the auto vehicles were actually postponed, but now they're definitely coming into effect. And Trump says he's not getting any leeway, so that's obviously driving sentiment. So let's see what the economic data was. And once again, we're focusing on the US because they are the world's largest economy. And in terms of crypto markets, they've been the biggest advocates, obviously, since the November 5th election, or, well, Trump was announced president on November the 6th, and his inauguration was on the 21st of January, and that was this year. That was also the time when Bitcoin hit its all-time high. So if we look this week, we see that durable goods orders, which are basically orders for manufacturers, that actually beat expectations. GDP growth was higher than expected. Now, core PCE, which is the Fed's preferred measure of inflation, that came in slightly higher. Personal spending came in slightly lower, and then personal income beat forecasts. So this doesn't create necessarily the a lot of fear to say, okay, the economy is really going to enter into a recession. But what we need to take into account is the fact that all those data points are backward looking. So it's looking at, okay, what's happened at durable goods orders in the past month? What's happened with GDP, gross domestic products, and that's so all of those are backward looking. So it's not necessarily taking into account what is going to happen after those tariffs and the knock-on effect. Some tariffs were implemented this month, and a lot of them, the focus is on April the 2nd, which, as I said, is on Wednesday. So there's a lot of fear revolving around that and what it actually means for the economy as a whole. And risk assets, such as crypto, are very susceptible to those risks. Because even though we've got some institutional, adoption, and we've got the prospects of a crypto strategic reserve, but not all of those policies and laws have actually been outlined. So we're still seeing the risk sentiment or risk aversion that doesn't necessarily favor cryptos. What it does, well, if we do look at Bitcoin, that has been relatively stable, and that has been obviously quite positive for Bitcoin and for the crypto market as a whole in terms of driving the market cap. But altcoins have definitely not benefited, and they have been taking strain. So if we look now, and this is Bitcoin, and this is basically the realized price and the price. And we look at what's been happening over the years. Now, we had the discovery phase, and then that was up until about Jan 2012. And then what we had was we had different phases. So the cycle, and then we have the present cycle. So if we look since 2012, the cycle or the trend has been positive, and definitely after 2020, which is round about here. There we go, April 2020. That was actually when most countries went into lockdowns, but that is when we also saw a lot of institutions or a lot of interest with regards to adopting Bitcoin because it's a digital currency. So at that time, we didn't necessarily want to exchange paper money because that was spreading, or that was a factor that governments were also aware that could actually be spreading the virus. So this is when we actually saw that legitimacy and that whole speculative aspect. It's still in play, but to a less extent than it was back then. And then we obviously saw Trump's inauguration, which pushed Bitcoin to the all-time high. And now we are seeing the pullback in prices. So if we look at altcoins and how they performing today, generally Litecoin, well, all these markets we can see are trading lower. The one that's trading higher is EOS, actually. So this is a snapshot. And if we look at Bitcoin, Ethereum, as I said, we can see over the last 24 hours, there has been quite a drastic sell off. And the one that has been performing, or the only one that's actually in the green today out of the top cryptos, is EOS. And so those are factors that we're looking into. And this isn't, well, although we saw previous in the beginning of the week, we did see some positive sentiments, there hasn't been any follow through. So it still represents, or it still reflects, that fear and sentiment is still actually in play, which poses a threat to the bullish trajectory that we saw with crypto markets. If we now turn to, okay, so the crypto market cap we can see is at 2.76 trillion. The fear and greed index, it is actually at 33. So we're still in that fear territory. And in this zone here, we will then go into neutral, but we're not there yet. Altcoin season, it's still Bitcoin season. So we do see that altcoins haven't necessarily they haven't been strong enough to initiate an altcoin season. And to be honest, as long as these fears and the economic uncertainty remains, I don't really personally see the prospects of an altcoin season, at least not in the first or second quarter. So, and I do think that especially if those tariffs are coming into effect on the 2nd of April, we need to also realize that the upcoming data after that, or the economic implications, could actually be quite severe. And we have had Donald Trump, and we have had other policymakers that have said, the economy or could actually experience some turmoil, although they say that may be transitory. Now, if we actually, I'm going to stop the presentation, and then we are going to turn to the charts, and then we're going to have a look at what's happening there. So now if we turn to the charts, and I'm going to share my screen. Okay, there we go. Now, if we go to, we're starting at crypto heat map, and we can see that today's performance, I'm just going to add the price here. Oh, actually, there we go. Okay, so we can see that Bitcoin now has actually fallen below 85,000, which was a previous key support level, and it's now holding as resistance. We also do see that prices are down 3.25%, and that has almost wiped out the weekly gains, if not wiped it out. Now, XRP, even though we had the SEC drop that lawsuit or say that there's not going to be any lawsuits, and we do have some hype around the potential for a XRP ETF, it hasn't been enough to actually sustain or push prices higher. One that's been a major lagger is Ethereum. And Ethereum, generally, it's seen as the altcoin. Well, it's basically seen as the leader of altcoins. It is the second largest crypto of the Bitcoin in terms of market cap. But even though we've seen other altcoins, even after the Trump election and inauguration, we haven't seen Ethereum show the same bullish sentiment as the other ones. Now, if we also look at why that is there's a lot of projects currently happening, and a lot of them are based on Solana and Cardano, and that has also taken some of the focus off of Ethereum and has shifted it to those blockchains. And that's if we see a lot of investments into those projects, which we have been seeing, then that doesn't, or that poses a very big risk for Ethereum. So now the previous support was 2000. We can see it is trading well below that. It is at 1880. And when we look at the charts, I may be mistaken, but I think this could be close to the yearly low, if not the yearly low. And BNB's actually been performing quite well. And that's also because of developments with partnerships and with projects. But today, we do see that once again, it's taking a bit of strain, along with most of these assets or cryptos. And these are just looking at the top 100. So just be aware of that. It's not representing all of the cryptos because there's obviously a lot. Now let's go to the weekly performance and then we'll move on. So weekly performance, as I said, Bitcoin was trading roughly 6% higher after the announcements or after those developments with regards. Oh, another thing was that the SEC or the new appointed SEC, Paul Atkins, he also announced that crypto reserve is going to be a main priority, and we could see legislation passed as early as April 2nd, which coincides with the onset of those tariffs. So that is an important date. And what we saw the beginning of the week is with BlackRock, with Strategy adding onto their holdings, and with the announcement of the potential for the crypto reserve regulations, we did see Bitcoin surge and it added over 6%. But now, as we can see, it's erased most of those gains. And the same applies for majority of the other tokens. On a weekly time frame, Dogecoin is still up, and that ties in once again with Elon Musk being the basically a key player in the Department of Government Efficiency. And they are also saying that there's a lot of basically investments, and there's a lot of policies that could actually benefit Doge. So that is trading slightly higher, but we do see today it has been giving up some of the gains. So now, before we turn to the charts, let's look at the economic calendar. So we've already said that, or we've already gone through the economic calendar for this week. But if we turn to next week, we do still have a lot of other data that we need to be aware of. Okay. Let's just see. What's this? Oh, there we go. Sorry. So we've got JOLTS job openings, and then we've got ISM manufacturing PMI. This is really, really important because this reflects the manufacturing sector, and basically it's a reflection of sentiment from the purchasing manager index. So it is based on surveys, but this is also a reflection on how companies feel that the sectors are going to perform. JOLTS job openings are the amount of job openings available. We haven't, there's still been quite a lot of optimism around the job market, but however, another thing to consider is that there's also been the Trump and the Doge departments actually looking to cut a lot of jobs, especially in the Federal Reserve agencies. And those announcements keep coming week after week. We see, firstly, while they've said that they're expecting to cut 10,000 jobs in the healthcare sector. We also saw expected job losses or job cuts in the education sector. So the potential for that, what we need to realize is, what does that do with the unemployment rate? Even though those effects might not be immediate, basically it could start, especially when those programs or when those job cuts actually happen, then that adds to the unemployment rate. Or that, and even if with tariffs, if there are companies that then can't pass on those tariffs to consumers, then what happens to their profits? They deteriorate, and that has a knock-on effect on the economy, and that is when we really, really see those recession fears, or the probability of those recession fears rising. So this is after the manufacturing PMI. We see the services PMI. So once again, it's reflective of the service sector and the sentiment around that. And then Friday is a really big day, because we've got non-farm payrolls, which is the job data for the US, and that is expected to decrease. But with what's been going on, and with a lot of that economic uncertainty really coming into play over the past month, we need to actually monitor that, because this is very important for the Federal Reserve as well, and they are responsible for setting interest rates. The chairman of the Federal Reserve is Jerome Powell, and he will then give his speech after the unemployment rate. Now, before, he was still very optimistic under the Biden administration that inflation has been tamed, and that we are going into a positive outlook, and that the US economy was still strong. Now, with everything happening and with all the changes, he has said that he's not ruling out economic downturn. So we need to actually be vigilant about this, because this does still impact the crypto markets and general risk sentiment. So now let's turn to let's turn to Ripple first. So if we look at Ripple or XRP, this is the weekly time frame, and between November and January, we saw that Ripple obviously benefited from the change with Trump being pro crypto. Then we saw that speculation of the SEC dropping that lawsuit, which boosted prices. And now that all of that has already been baked into prices, we have now seen a pullback. And once again, we are now trading in a zone, it's actually around the 20-day moving average, if I'm not mistaken. Yes, the 20-day moving average, which is now it was providing quite a firm level of support, and now it has turned into resistance. So if we are looking for a break higher for Ripple, we would actually need a break of the 2.53 level or 2.5, which is a key psychological level. And then that could actually open the door for the potential for the $3 mark. But we haven't seen that follow through yet. But when there are periods of consolidation, such as this, where prices are actually lingering or trading just in a tight zone around the key moving averages, there is potential for a solid breakout in either direction. And that all ties into what are economic expectations. And now, with regards to those policies, even though we're still seeing that positive changes in policy, that's already being overshadowed by the trade wars and the threats of tariffs and the potential for the economy to actually really deteriorate. And that opens the fears of, well, basically it escalates recession fears. So that those seem to be the main factors that we are actually focused on or that markets are watching. Then if we look, so taking a look at Dogecoin, for example, once again, we saw Doge in December. So if let's take into account, or then let's just look at actually here from the November low to the January high. Okay, no, that was the December high, sorry. So if we look at that and key Fibonacci levels, then we can also see that markets have really been on a downturn. Over here, we did get, looking at this, so if we look at the 3rd of November, so just before the elections, prices were trading at a low of 0.14. Yes, 0.142. And now what we have also seen on the 11th of March, that prices actually tested that zone, or it was actually, well, it didn't test it, but it went to 0.1427. And at the November, in November, it was 0.142. So we did see that prices nearly retraced that whole move from November to December when there was a huge increase. And now we have had some positivity, but still not enough, even with those policies and the speculation around the strategic reserve. It still hasn't been enough to actually break above 0.2. If we now look at the other, the Fibonacci levels, because I've taken, let's just look at some other Fibonacci levels that are generally quite important, and let's see what they actually mean for markets. So with regards to Doge, as I said, now that 0.2 level, which is a psychological level, now that comes into play as resistance. Above that is the 78.6% retracement of that same move at 0.21539. But we can, even if we just take a trend line, we can see that the general trend has been bearish. And okay, if we extend it, well, if we're looking from Jan to March, we have seen a slight break of that downtrend that had persisted, but we will need further confirmation to justify a further bullish movement. Okay, now if we are going, let's look at, okay, Ethereum. As I said, Ethereum's been one that's really taking strain. And on the right-hand side here, we can also see what's been happening in crypto. And we can see the live prices as well as the performance. Now, this is the gold to Bitcoin ratio. Generally, what happens is in periods of uncertainty, gold does really, really well. And we have seen gold trading at record highs, but we haven't seen Bitcoin being able to break through that 90,000 to go back to the all-time highs. So gold has still been an outperformer. Today we can see that the gold to Bitcoin ratio is up 4.2%, once again confirming that there is a lot of fear out there, and gold is still remaining as the primary inflation hedge, and it still is benefiting from its safe haven appeal. If we now go to Bitcoin, and that's the one that we are really interested in because this is still the dominating factor. And we look at some of those price moves. This is taking the price move from, January 23. Let's extend it. To November 2022. So this is the weekly chart and the time frame. Now, with regards to the presidential election in November, we did see prices gap higher, and that gap still holds because even though we saw a pullback here, prices didn't actually manage to fill that gap in terms of the official opening and close price. So we would need to see a full body candle that fills that gap, and then that could also mean that's a potential indication of further downside. Now, what we can also look at is, let's look at the RSI and which is the relative strength index. And this shows the momentum of the trend. So we saw a positive momentum throughout this move, which was expected. And then after hitting that's September 2024. So here is the period that we're actually focusing on. So from November, or even pre-election, from September, we saw prices rebound off of their primary support, and prices then went up. Now, this was overbought territory, or what's considered overbought territory for the RSI, and actually it was quite accurate because after going into overbought territory, as long as we saw that prices or that bullish momentum faded, which is basically justified by this downslope here. And now it is in neutral zone on the weekly time frame, so it isn't indicating that prices are oversold at the moment. But let's go into the shorter time frame. Let's go to the daily chart, and then let's look at what's been happening there. So we see on the daily chart, now I've taken another Fibonacci here, just more of a shorter term. For some reason, I can't adjust my charts here. Actually, no, this is the long-term move. This is the move that we were looking at. Unless, did I do? So this was the move that we were actually looking at, the 22 to 2025. And now we can see at the 23.6% retracement of that major move, we see that now that's also holding as resistance around 87,755. The next level of support, or a key level, is 73,900. Now, if we add in some other indicators, such as the moving average, the moving averages, we can also, from here, let's actually do 3 of them. So let's start off with the long-term So this is the 200-day moving average, and we will make that black. Okay. So we can see for this period, we could see it was providing support. Then after that pullback in March, we did see a bounce off support, and now prices are still trading above that. But if we look at closer moving averages, let's look at the 50 period, and then we will look at a shorter one like the 200. Okay, so for the 50 day, the 50 day is now holding as another key level of resistance. So if we do see a break above 87,755, this would be the next level, and above 90,000, which is a key psychological level, then we would be looking at that 50 period moving average, which is currently holding at 92,893. And those levels, even if we look at the longer term timeframes, have really been important. And as I said, it's also a psychological. So technical analysis isn't just looking at prices on charts. What it is we believe like prices are reflected on charts, and that is reflecting market expectations, and that is, in essence, client psychology or market psychology. Okay, now let's go. This was the Jan 13. We also saw that pullback after quite an extensive rally, and that is now another zone of an important zone, which is now, that level is 89,525. So around 90,000, or between this period, there has been some consolidation, but this zone is extremely important, especially since it helped provide, it initiated the breakout in November, and now it is, if we actually draw, or if we highlight it, let's have a look here. So if we highlight it here, we can see, okay, it initiated that breakout, and then prices boomed, and then it provided support at the upper band, and then once again there was a breakout of that. The bottom band provided another level of support. Then we saw that pull back to the 200-day moving average, and now we see prices have gone back into the zone. And let's look at the 20 period moving average, because at the moment it's on the 9-day. Okay. So let's look now at, okay, change the color, at the 20 period moving average, and we see prices are also lingering around there. So the moving averages are they firstly simple, and they do provide some really, really good insight, because this is tracking prices over the past however many days. For example, this is the past 20 days, the past 200 days, and the past 50 days. And it is providing a general overview of what's been happening with prices, and that matters because, as I said, it is a reflection of sentiment. So those are the factors that I'm looking at. With regards to altcoin, I'm still skeptical, primarily because of those risks, primarily the tariff risks. But we are seeing some altcoins that have been doing well, but a lot of them have actually surrendered most of the gains today. As I said, EOS is actually positive. There's other positive ones, but they just very few and far between at the moment. Okay, so we do have another one here that is still trading higher, and this is part of layer one. But generally, sentiment is down, and I think next week is going to be a crucial week for crypto markets. More specifically, I think Wednesday is actually going to be more important than non-farm payrolls. But those are really, really big market risks. And then we also have other economies that I haven't really touched on. But obviously, if we're looking at the global markets and other economies, I've been looking primarily at the US because, as I said, that's where this crypto, or at least the crypto rally, that is where it stemmed from. And the US has been the prominent driver of crypto prices, especially since the election. But we haven't necessarily seen Europe adopting the same positive sentiment, or the same optimism for the future of crypto. But next week, what we have on the other, for the rest of the economic, let's look at the economic calendar to see what's going on here. Okay, so Monday we do have, as I said, we had manufacturing PMI on Tuesday, and that's for the US. We have the PMI for China, and this is also going to be a big one because China is a manufacturing hub, and they've been really, really exposed to tariffs, especially from the US. However, we have seen them actually coming back strong, but that's also because there is still room for more fiscal policy, and that will pump in more money to support the Chinese economy. But this will be, I think, an indication of, once again, sentiment around the manufacturing sector. And then we've got, inflation data from Germany and Italy, and we've also got manufacturing index from Japan. And then on Tuesday, once again, we've got manufacturing PMI. These are just different measures of the different PMIs. And then we have the inflation rate from the European Union, which is also going to be very key because it's going to also give an indication of how the ECB may react and how those price pressures and those inflation risks are actually gearing up. So those are factors that we're watching. Okay, if inflation, something like inflation, if it comes in higher than expected, that's generally bad, even though that may raise expectations of lower interest rates. Those have already been forecasted and priced into markets. So when we get higher inflation, then and we've already got those other economic threats, then there's fears of stagflation, which means price pressures and inflation remains high, but the economy doesn't grow. And that raises risks of recession, which isn't good for markets as a whole. So those are the factors that I'm watching, as well as unscheduled risk. So when policymakers are making comments, then that is also triggering fear, and that's driving volatility, not only for Bitcoin and for crypto markets, but we see the same narrative play out for stocks and other risk assets. So those are the factors that I'm watching, and I will catch up with you on Monday just to look at how prices have been reacting, maybe focus more on technical levels and other indicators since we've covered the economic front and fundamentals, and then we will have a look at what may be expected throughout next week. Thanks for joining once again, and have a safe weekend.